Let's pick up on the markets now. The local index looking set to lift as China's COVID-19 stance boosts the markets. Tencent, the bourse also rallied at the end of last week due to weaker than expected U.S. inflation data. Makwe Masilela is Chief Investment Officer and founder at Makwe Fund Managers, joining us now to give us a quick sense of how the JSE has opened in early trade. Good morning to you, sir, and let's start with the overview of how the markets have opened this morning after extending gains in the last session.
You are right. We're starting the week on a very positive note, noting that on Friday we're up almost just over 3%, and for the whole of last week the JSE was up a whopping 5%, and all because of those signals coming from China that there are some positive developments, whether it's on the COVID-19 caps or also on the fact that they are aiding or looking to start helping their struggling property sector. But we've also been warned by one of the U.S. central bankers saying we must not get too excited about one inflation reading. So I think markets, they will continue to be mixed during the course of the day.
Let's quickly get on to company news, starting with Vodacom, which has published its interim results for the 6 months, which ended on the 30th of September 2022. How have they fared?
Their resilient revenue performance continued from Q1 to Q2. Yes, we've seen that they've just been a nice increase when it comes to mobile customers. That's sitting with almost 63 million. We've seen the group revenue up 7.7%. We've seen the group service revenue up 7.2%. We know at some point they were also aided by a weaker rand. And also we've seen that, unfortunately, their interim dividend had to go down by almost 19%. But some of these issues are because of high energy costs, and all because of the inflationary pressures that consumers are facing. And Vodacom, at some point, they tried to help their customers, and also those once-off start-up costs that they had to pay when it comes to Ethiopia. Hence, we've seen their profits as headline earnings per share down almost 9.5%.
Let's pick up on Telecom, also publishing a trading statement for the 6 months, which ended on the 30th of September. How are their numbers looking?
Not okay at all. We expect their profits to go down by anything between 45 and 55%, mainly due to the fact that there was these changes when it comes to the postpaid and prepaid mix. So that resulted in them having to defer their revenue for almost 24 to 36 months, and also their cost-based increase. But those things were partially offset by savings coming from employee costs and marketing, also from reduced taxation, and also the fact that the guys, they expect the finance charges to reduce because of a favorable hedging position.
Let's conclude the conversation with Brait, which has published its consolidated unaudited financial results and their intention to list on the main board of the JSE. Talk us through those developments, your quick sense there.
It makes sense, because look at their net asset values up only 0.4%, but you look at Premier, remember, Brait is an investment holding company, so they've got investments in Premier, so that Premier continued to gain market share, volume growth as well, and Premier itself, because the other guys who are selling your Iwisa, your Lillet, your Blue Ribbon Bread, they managed to pass over those costs as well to consumers. And now you look at Virgin Active, they managed to increase membership by almost 20%, sitting at almost 905,000 members. And you look at New Look, also not doing too badly, but yes, here Brait is looking to sell anything between 43 and 53% of their stake in Premier, and they will price that at anything around 57 to 67 rands, and all in all they'll be raising almost 3.7 billion. So they're looking to list that on the main board, that is Premier Food, but it all depends on favorable market conditions.
Makwe Masilela, Chief Investment Officer at Makwe Fund Managers, thank you very much for that markets update.